Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Well, the crypto world is buzzing again. Once more, Jake Claver has ignited debate with his latest bold forecast, a claim that XRP could reach $750 by the end of this year. It's the kind of prediction that lights up social feeds, sparks endless discussions, and forces every investor, skeptic, and enthusiast to pause and ask, what's real and what's hype? Claver isn't simply throwing out numbers. Behind this headline-grabbing figure is a detailed vision, a theory that ties XRP's price to macroeconomic events and institutional adoption and the intricate mechanisms of the global financial system. Because as thrilling as the prospect of $750 XRP sounds, the question that matters most isn't the number itself, it's the reasoning that underpins it. So let's talk about the power of prediction. In today's crypto environment, one confident statement can ripple across the internet instantly. Jake Claver has long been known for his bold calls, and this latest forecast is no exception. Yet the story isn't just about viral hype. It's about understanding the catalysts he identifies: spot XRP ETFs, interest rate shifts, institutional inflows, and the potential for XRP to underpin global settlement networks. Every day, narratives in crypto ignite like wildfire. Claver's approach is different. He maps assumptions, identifies triggers, and illustrates exactly which macro and institutional events could fuel a surge. The numbers are staggering. 750 XRP implies a market cap beyond any crypto precedent. While some dismiss it as fantasy, Claver's logic is anchored in a convergence of market mechanics and institutional adoption. Catalyst of convergence. At the heart of Claver's forecast is what he calls catalyst convergence, a perfect storm of factors that could combine to drive XRP higher. Approval of spot XRP ETFs, unlocking institutional capital, interest rate adjustments that could push liquidity into alternative assets, massive inflows from banks and payment institutions using XRP for settlement. If these align, Claver argues a parabolic rise could occur, but it's worth noting that assumptions, rapid ETF approvals, adoption by financial institutions, at scale, regulatory clarity, and minimal friction from legacy finance, each piece is critical and crucial. So let's talk about supply and demand mechanics. XRP supply dynamics are critical to understanding this theory. Total supply, 100 billion, with roughly half in Ripple's escrow. Only a fraction circulates actively. If banks, TFs, and payment providers begin acquiring and locking up XRP, the liquidity supply shrinks sharply. Claver illustrates that if only 100 million tokens remain actively tradable, scarcity alone could drive prices upward quickly. From an economic perspective, it's simple. Supply and demand, extreme assumptions, yes, but fundamentally sound. Let's talk about derivatives market integrations now for a second. Now here's where it gets truly fascinating. Jake Claver ties XRP's long-term potential to the global derivatives market, which is estimated to have a notional value anywhere between $400 trillion and $1 quadrillion. These numbers are eye-popping, but they represent the total value of contracts, not actual capital that changes hands. Claver's argument, even if XRP were used as a settlement layer for a small fraction of that market, it could drive extreme price appreciation. Let's break this down. Assume XRP settles 10% of the derivatives market, roughly 100 trillion in notional value. Divide that by XRP's total supply of 99 billion tokens. Mathematically, you arrive at $1,000 per XRP. Reduce available supply that's circulating, say only 10% of XRP is liquid, and the per token price multiplies dramatically, leading to his upper end targets of 10,000 to 50,000 in theoretical scenarios. Of course, Claver emphasizes that notional value is not real money. The actual liquidity required is far smaller, measured in trillions rather than quadrillions. But the exercise illustrates the scale of potential adoption if XRP were ever integrated as a global settlement asset. So let's look at realistic versus extreme scenarios for a second. Extreme projections grab headlines, but Claver also defines grounded ranges. Near-term plausible, he states, $10 to $25 XRP if ETFs progress and liquidity begins to rotate on-chain. An aggressive long-term view, 3-digit XRP prices if institutional adoption scales and supply tightens. The critical factor is the balance of supply versus demand. It's always about supply versus demand, no matter what. XRP's deflationary design, limited supply circulating with high escrow holdings, amplifies price movement with institutional demand spikes. XRP's deflationary design, limited circulating supply with high escrow holdings, amplifies price movement when institutional demand spikes. Ripple's infrastructure and adoption. The groundwork is being laid. Ripple continues expanding partnerships, payment corridors, and on-chain settlements. Tokenization of real-world assets is accelerating, creating use cases for XRP as a settlement medium. ETF approvals are a major milestone. They could trigger large-scale institutional participation, create liquidity demand, and make XRP a viable tool for settlement at scale. Claver describes this as a feedback loop. Higher adoption drives scarcity. Scarcity drives price. And rising price encourages further adoption. Here's a derivatives deep dive. The math behind the vision. Let's unpack the derivatives connection further. Global derivatives market is 400 trillion to 1 quadrillion. XRP total supply, 99 billion. Circulating supply, 10 to 20 billion potentially available for trading. Settlement adoption fraction, even 1 to 10% of derivatives contracts rotated through XRP could represent hundreds of trillions in notional value. So for example, 1% adoption of 400 trillion is 4 trillion in transactions. Spread over limited liquid XRP supply, significant upward pressure on price. Claver's logic isn't saying XRP will literally hit 50,000 tomorrow. It's a theoretical extrapolation showing what could happen if XRP became the base layer for derivatives settlement globally. So psychological impact of bold forecasts. Well, bold forecasts like Claver's have a powerful effect. They capture attention, drive engagement, and influence market settlement. In crypto, perception often shapes reality. Investors react emotionally to viral forecasts, which can drive real trading actively, sometimes independent of fundamentals. Claver's transparency above his assumption is key. He clarifies which events are required for upside, where the risks lie, and what a realistic scenario might look like. It's a high-energy mix of data, conviction, and psychology. So the long-term vision, Claver envisions XRP evolving beyond a payment token into a collateral and settlement layer for the global financial system. He points to Ripple projects like CODIS, designed for smart contracts, and tokenized derivatives, as potential enablers of this vision. While the upper-end price targets are extreme, the principle is clear. Utility drives value. The more XRP is used for settlement, collateral, and institutional liquidity, the more constrained the circulating supply becomes, amplifying price potential. So supply shock and timing. The key mechanisms in Claver's forecast is the supply shock. Demand surges while circulating supply dwindles. ETFs, treasury holdings, and institutional adoption could catalyze this. However, timing is everything. Banks, clearinghouses, and global institutions must trust XRP's liquidity for high-volume transactions. Adoption takes infrastructure, regulation, and coordination. Price appreciation will be nonlinear, with spikes and retracements along the way. So looking between hype and reality, where does this leave us? Claver's forecast of $750 XRP and even his extended projections of 10,000 to 50,000 illustrate a vision, not a promise. The foundation is being laid. ETFs, institutional adoption, Ripple network expansion, and tokenized asset integration. Well, this isn't financial advice, it's financial research. The takeaway for investors, understand the mechanics, appreciate the risks, and recognize the difference between potential and guaranteed outcomes. XRP's deflationary design, combined with growing utility, creates a path for significant price movement. But extreme valuations require perfect alignment across multiple macro, institutional, and regulatory factors. So dream big, stay informed, and watch as the next phase of global financial infrastructure begins to unfold, with XRP as the center of the story. Thanks for watching, and I'll see you in the next episode of the Crypto Republic. If this opened your eyes, smash that like button, ring that bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.